So now continuing on part 2 from August 14th, Friday's trading. We're looking at the behavior of the action in the market after this low was established. We didn't know for sure it was established until what comes later, but we had information and we had what could be reasonable hypotheses being validated, because we had a low here that was a probe right after the open. It was a probe of the lowest level of trading in the pre-open market. And we had here a spike through it, but the price was only under the previous low in the earlier morning for under 2 minutes. So after that very short period of the probe, it was clearly rejected. And this is what the candles can tell us. When we get down to the level of the individual bar, we notice each of these two long stem bars here had the exact same low to the tick. So there was a definitive rejection of this probe lower. And then the market went back above the support that had been existing there in the morning. And the selling that followed that, and this is at 10:30 in the morning, they're already going to lunch on Eastern time after 11:30. But the action was very weak in terms of retesting this early open low, early post-open low. So they got within a tick there, and then there was strong buying. How do I know strong buying? All these green bars with longer range going right up to, actually going right through the previous support and resistance area formed at yesterday's low. But they went right up to the night session open and then were rejected there. They were not really totally enthusiastic selling. It was just some back and forth trading, settling right down to that yesterday low price again, to the tick, bouncing off it and coming within a tick and then rallying higher, and then stopping again at this new resistance that's formed here just above the night session open. Sold off with a little bit more energy here. You could see them break through, but it only went down for 2 1-minute bars, and then you had an outside reversal bar. That's another one of our price action bar patterns that can give us information from the candlesticks. And then it basically jockeyed around this area just above the last pivot back, just below the yesterday's low, and then it broke through. So the way we see this from market auction theory is that during this period between say 10:45 to 11:45 in here, the price was seeking value. It appeared that the market was pretty convinced to reject any attempts to move lower. And the next question is there enough interest from the people who have concluded the market doesn't want to go lower into putting their money on the potential event of the market going higher? So during this period, and this is in that slower period of trading that comes every day between, say, 10 and 12, the price was seeking fair value in this range. It tested the prior day low, and then once again, it briefly made a weak probe lower just below the prior day low, but it was rejected fairly quickly. And the rotation then was giving the participants enough information that they would give it a shot at taking the market higher. Now, once the market starts going higher, the expectation is, where are they going to go? Well, seems like everybody's pretty sure They don't want to sell the market under yesterday's low anymore. They've established some value here in this range around the night session open and above the previous day's low. But they still haven't broken the last pivot back from the morning high. They have to get through that before you can get a feeling for what they really want to do. And this is where they did that. Now, again, remember, this is what we're looking at, let's say, when people come back from the lunch hour. Let's say we'll give it till 12:30 Central Time. Those people who went away to lunch, the market just rotated in the middle of the day's range. And then they come back after, say, 12:15, 12:30 period. You usually see a good move up or down. But this is the target. When you have this auction process, the logical parameter that everybody's basing their decisions on is, what has it done lately? We look to the left of the chart to get that information. What has the market shown me lately? And we've just been analyzing what it showed in the morning period of trading, up to the noon hour in Central Time. So these levels are the levels that we're going to be able to trade off of and either verify or negate what our opinions were about the direction of the market. So this is the target, and they got within 2 ticks of the target right here. They were rejected, and again, we can have parameters of identifying rejections when we see this is a very common thing in trading, 3 drives to some high or 3 drives to some low. And each time at the peak of the drive, the bar sells off, even on a 1-minute bar. These bars that in candlesticks, there's many different names. We could call this a spinning top, or we could almost call it a shooting star. We could call this maybe a shooting star. These are just names given to bars that show us that the bar was deflated quickly when a market's rising. It's like the price deflates, similar to what we see on the delta charts in the market profile method of analysis, where it's clear the buyers just bailed out. The buyers didn't have enough strength to keep it going, and it was like the air was let out of the balloon. So we had 3 peaks on this drive to resistance, so it wasn't such a strong attempt, and it sold off fairly quickly right back down to this kind of new pivot for the day, this night session open level. They've been looking at the market all day. Do they think it's going to be a market that closes higher than it opened or lower than it opened? And this rejection in the morning leads us to have a bias that it's probably going to close higher than the open. So let's see how it flows, and this is how it's flowing. It gives us 3 drives to a top, sells off with a good bit of energy, but it stops here. Now, it stopped once, but then it stopped twice, and then it stopped 3 times. Once again, that's a really good vantage point that we can use to see what a market is deciding when we get 3 times, and that conviction then becomes more validated when they've given it 3 shots. Similar over here, we have 3 drives. One, two, three. Down here, you could say, now I evaluate these drives after some breakout point. So it would be 3 drives after breaking through this resistance, or breaking through the night session open resistance. So there's the first drive, second drive, third drive. And now also after a high, when you see 3 RTFs, I call them, a retest failure, RTF, retest failure. So This one tested the high and failed. This one tested the high and failed. This one tested the high and failed. They didn't even get close. So that was a pretty weak attempt at validating an upward bias. So that's why when it broke the last pivot back, it was weak enough to keep going for a while. Now up here, we've broken through the last pivot back on the upside, but there's not enough conviction yet because it turned around and it went lower again. Now, this 3 attempts to pound in a low is another basis for the market to give it another shot. And eventually it broke through those 3 drives to a top. And it even broke through the pivot towards the end of the day. The last hour of trading was all above the day's pivot. So that's a conclusion. The market closed fairly close to the high on the day. And the question is, how do we make money off of this? And this is not how we make money. This is how we get the big picture view that helps us in our trading. The big picture view to have a grasp of the flow of the market, to have a handle on what the participants in the market are revealing. They're showing us their cards. We're getting really good visual information that is giving us a way to understand the structure and the flow of the market during the day. Now, I hope you can see from these 2 videos that it's not just the end of the day here where we have a clear picture. This is the night session, Sunday evening open. So you can see, because the market's made a clear close on the high of the day, the night session on Sunday, they're going to see if they can keep it going for a while. That's how the night session would logically begin, and that's what they're doing tonight. But all this information is building in the day, and I hope you can see from going through the videos, this information was presenting itself right here, a half hour before the open, even at the open. A good amount of information in the first 2 minutes. It was rejected strongly off the low, went back up above the opening range. That gives you an upward bias. So when it sold off here, that's a good opportunity maybe to jump upon that information and feel like they've given it enough shot to the downside, and they're above resistance now. We're above what had been support that was broken and immediately reversed. So now that support should become resistance, and in fact that's what we see here. It goes up to higher highs in the first half hour. So these 3 retest failures here gave us information that said we should be selling for a while, which we could have done on this retest of it broke through the night session low, came back up, support resistance becomes, support broken becomes resistance. So that was a basis to sell down to here. And now down here, they're rejected. We always pay very close attention to what happens at key levels of support or key levels of resistance to see if we can get a trade. And here's a really good trade because they had a low here. They broke through very quickly, only held for 2 minutes, went back up above this support, and it should hold here. It's worth a bet. It's worth putting on a trade with a very, very small stop of just a few ticks under these support points. So that was a very good potential, very profitable trade. Here, it's rejecting this probe here, just like it was rejecting the probe here. So this was a good selling point because when they go above for a few ticks for less than a minute, that's one of our market profile indicators. The delta dried up, you could say. There were no more buyers wanting to push that market at all. So jump on board with the sellers. Now the opportunity here, 416 down to 4509, 4516, 4509. That's 7 points. So that's 28 ticks in the NASDAQ. That's per contract of 120. What do we got? 120 bucks. actually $140. I'm counting wrong here. Let's say when we went to this level, that's 7 points. So that's 28 ticks. In the NASDAQ, $5 a tick, $140, and that's for one contract. So if you're trading the NASDAQ with 4 contracts, you're making over $500 on one trade. This is what you can do with this information of market flow is usually find that it will present you with enough opportunities of making at least 8 to, let's say, 10 ticks, 20 ticks, all of these. It's very, very common during the day. There are many, many opportunities in that range. And, you have solid 3 times repetition situations like this, 3 time repetition situations like this, and probes here that are reversed at places that have the 3rd time breaking through here. So basically, this level of understanding market structure is the basis for getting a solid conviction about the direction of the market that will enable us to hop on board at specific points and times of the day, which we can cover on another video. And you got a feeling for it today. I mentioned some times right after the open, a half hour after the open, 10 o'clock Central Time to 12 o'clock Central Time, and the 12:30 return to the market that's very common. And so you have specific times of the day to hop on board these opportunities that come along day after day. So I hope that's helpful for giving you a feeling of how to practice with market flow and structure. Thank you.